Welcome to the Accounting Success Podcast. Ian Wellham is a chartered accountant, helping other CPA firms maximize their profit potential and become the most relevant advisor to clients. To learn how you can add value, introduce new revenue streams, and move into high-value advisory services, simply go to www.haydenrock.com. On the podcast, Ian brings together successful accountants and industry thought leaders to share with you how they serve business owners and how you can too. And now, here is your host, Ian Wellham.
Hello, and welcome to the Accounting Success Podcast. I'm tickled pink today because on the call is Ron Baker, the legendary author, speaker, educator, CPA, and an enthusiastic crusader against hourly billing. Ron started his CPA career in 1984 with KPMG's private business advisory services. Today, he is the founder of VeraSage Institute, the leading think tank dedicated to educating professionals internationally, and the author of 7 best-selling books. These include The Professional's Guide to Value Pricing and his latest book, The Soul of Enterprise, Dialogues on Business in the Knowledge Economy, co-authored by Ed Kless. Welcome, Ron.
Thanks, Ian. Thrilled to be here.
I'm thrilled to have you on the podcast today. Year after year, you voted one of Accounting Today's top 100 most influential people in the profession and named one of LinkedIn's influencer bloggers. Personally, I've been a fan for some time, Ron, and I consider you one of the foremost thought leaders in our industry. Thank you for taking the time to visit with us today, and of course, impart some pearls of vision.
I'll do my best.
You absolutely. It's just going to go great. So, Ron, I got lots of topics I'd like to get to, but before we dive in, I always like to know a little bit more about my guests. Perhaps you could explain to us what inspired you to become an accountant in the first place. What was the attraction, and who was your biggest influencer?
Well, I knew I wanted to be a CPA at the age of 15 in high school because I had an accounting teacher in high school, and he had a 2-year accounting program, believe it or not, and he would bring in CPA speakers, and my father was a barber, and he had a lot of CPA customers, and so when they were getting their hair cut, I had a captive audience for an hour, and I used to sit in front of them and just pepper them with questions about the exam and the colleges they went to and what they did and how they did it. So I actually started doing books, Ian, and tax returns even at the age of 15 for businesses, and I even defended some IRS audits. So fanatically, at the age of 15, I kind of knew this is what I wanted to do.
Wow, so you were hooked at the age of 15. That's quite something.
Yeah, absolutely.
IRS audit? What was that? Can you throw a little light on that for us, Ron?
Yeah, my dad got audited, and a few of his friends also got audited, who I did the books for, like small businesses. And when they got audited, they actually signed over a power of attorney, and I actually showed up, just me, at the IRS offices defending them, or at least representing them. And the IRS kind of looked at me sideways. I was probably 16 or 17 at the time, and but they let me do it. And it was an excellent learning experience. And now I was coached by the CPAs that I had access to, but I did it on my own, and that really it really gave me an opportunity to see a side of the profession at a very young age. And by the way, at all the time I'm doing this, I'm filling out a timesheet and I'm billing hourly.
Wow, an hourly biller at 15.
Yes.
And how did you find that a little bit nerve-wracking, or were you already confident in your abilities, Ron?
I don't know about I found it nerve-wracking. I'm sure I did, especially the IRS thing. Absolutely.
Was that the last time you filled out a timesheet?
No. As a matter of fact, I went into a big 8 accounting firm and filled out one there. And when I left there, I started my own firm, and I was what statisticians call path dependent, right? What you are in the future is determined by what you were in the past. And of course, when we launched our own firm, I filled out a timesheet. So the light didn't come on about the timesheet for me or value pricing until I ran my own firm for about a year and figured out there's got to be a better way.
I wish you'd have figured it out before I went to the profession, because I hated timesheets just as much as everybody else.
I don't know anybody who likes them.
No. So let's jump to a topic that's near and dear to your heart. For years now, you've been making a strong case for value-based billing over hourly. For those Rip Van Winkle CPAs out there who haven't heard it, what's your core message? Why value-based billing versus timesheets?
Well, because it's really about the business model, and a business model, is the way I define it, is how you create value for your customers and then how your firm captures that value. The capturing is, of course, the pricing strategy that you deploy. And, I was taught my entire career that I sold time, but there's not a customer alive that buys time. They buy outcomes. They buy transformations, moving them from point A to point X or Y, whatever they're trying to accomplish in their life, financial goals, business goals, retirement goals, legacy goals if you're doing estate planning. So I realized that the billable hour is a lousy customer experience because the customer never knows the price until the work is done. Well, that's a rotten time for the accountant to find out that the customer doesn't like the price. So you get angry phone calls, or people come in and go, "Why didn't you tell me it was going to be this much?" And Ian, my only response to that was, "I spent the time." Well, the customer doesn't care about the time. Nobody cares how long it took Porsche to make their car. You care about the outcome, right? And so I just realized there has to be a better way to do this, and that's when we started to experiment with fixed pricing. And this was in late 1989. Where there was nothing written out there. There was nobody out there talking about it, really. And so we made every mistake in the book in my firm when we started this, but I knew it was a better customer experience, so I stuck with it.
To me, there's no argument against the case you make, Ron. And yet, I feel I'm still, a bit of a loner out here with people like you, because the majority of CPAs continue to be slaves to the timesheet and rent themselves out by the hour, if you will. Why do you think there's so much resistance to change?
It's a great question, and it's one that I've pondered literally since I started this, and I think it's a multifaceted answer. We can chalk it up to the old cliches of people don't like change, they're risk adverse, they're loss adverse, and I think all of that plays a role. But I think the big thing here is we're trying to change the business model of a profession. And professions, by their very nature, like government and unions and schools and other institutions in society, are by their very design to preserve and protect the status quo. The only institution in society that constantly and is designed to bust up the status quo is the business enterprise, entrepreneurialism. And professions aren't exactly hotbeds of entrepreneurialism. And so I think to get a profession to change its paradigm can take decades and even centuries. And the classic example I use on this, Ian, is bloodletting. Doctors rejected the germ theory for 500 years, some scholars think, and they used to engage in bloodletting with a lancet. And it was completely medically inefficacious. It killed people. Doctors probably did on net more harm than good prior to, say, 1910. And yet they stuck with it forever. In fact, one of the leading journals in the UK in the medical profession is called The Lancet.
Yeah.
So it's very, very difficult to change a profession's operating paradigm, its business model, if you will. Look what's happening with Uber and taxis. I mean, that's an example of the free market, which is much quicker to diffuse new business models and new technologies and new ideas. That process is much slower in a professional organization. Another great example, by the way, is the two doctors over in Australia who came up with the theory that ulcers were caused by bacteria in the stomach, not stress. but they were fought, and I'm not kidding. There's a great book on this called The Ulcer Wars, but they were fought for 15 years by a supposedly scientifically based profession that they couldn't be right. So they wouldn't let them lecture. They wouldn't let them publish in peer-reviewed journals. Well, it turns out they were right. They went on to win the Nobel Prize. But it took the medical profession over 15 years to accept their theory. Now, that's an evidence-based profession, so how long is it going to take us accountants?
Yeah. Well, one of the arguments I hear from CPAs when I discuss value-based billing is that they want to make or have tried to make the switch, but clients object and won't accept it, which I find surprising, frankly, for all the reasons you just mentioned. But what do you think it is that these CPAs are missing?
They're not communicating it right. They're not conveying it right to the customer. They say, and I've heard this before, customers object. It's lunacy. Customers want certainty in price. Can you think of anything that you buy with your own money where you don't want to know the price up front? I can't think of anything. I mean, because we consumers, we human beings, forget consumers, human beings want to know the price so they can make that value price trade-off before they buy, not after, not during, And so to say that customers reject this is lunacy. It goes against every other business on the planet that prices up front. If that were really true, airlines would be able to charge $5 a minute.
Yeah, I agree. So who's doing this well today? Can you give us a couple of examples of CPA firms that are using value-based billing?
Yeah, there's quite a few of them. I've got my think tank VeriSage has probably 15 or so practicing fellows, a lot of which are CPAs. Some are attorneys, some are consultants, IT firms, things like that. But there's lots of them, basically. My colleague Dan Morris in Silicon Valley, Morris and D'Angelo, he's been doing value pricing since I met him in 1996. My ex-partner, Justin, still runs our firm. He bought me out, and he continues to value price. There's sole proprietors. There's 2-partner, 3-partner, 4-partner. There's a couple of top 200 firms in the USA that have gone all the way down this road, and I mean value pricing and getting rid of the timesheets. And there's a couple of top 100s that are making the journey. I'm not going to say that we're going to be successful with this transition until we get a big 4. But one thing I do know is that revolutions happen from the bottom up, not the top down. So the big 4 will be the last dog hanged at this party. They'll hold on to their timesheets probably past my life cycle. But we're seeing a lot of innovation from smaller firms. There's a new generation of firms out there that have changed to this business model. And I just want to say, it's not just pricing. It's not just a pricing change. It's a business model change, and that's an important point because it goes far more than just how you price. It's what you measure. It's what you look at. It's how you market. It's how you communicate. And to me, you got to get rid of the timesheets. If you're doing timesheets, you're not value pricing.
So what are those one or two other big mistakes aside from the timesheet and the hourly billing that you see the CPAs making, which is preventing their growth, preventing them changing to become a 21st century accountant?
I would say one obstacle, if they're in a partnership, is the partnership model itself. The partnership model is just anti-innovation. It's the antithesis of innovation, right? I love Margaret Thatcher's line that consensus is the absence of leadership. And the partnership model is a consensus model, not a leadership model. So that's one obstacle. We've broken up many partnerships making this change in firms because some partners see it and get it and others don't, and they end up splitting. So that's one issue. Another I think mistake firms make that want to do this is they don't give it the necessary resources. I believe pricing needs to be centralized in your firm. I think you need to establish a value council and maybe even appoint what we call a chief value officer. Somebody needs to be responsible for driving this change and keeping it moving and for pricing, a group of dedicated pricers who have and develop a core competency in it. I think it needs to become a core competency in firms because it's not right now. And the only way to get a core competency is to let the people who are good at it do it. I think way too many people in firms, partners who price, are terrible at it. Well, if I was a terrible auditor, you wouldn't let me audit, right? You'd put me in tax or somewhere else. Why do we let partners who literally are wimps at pricing, why do we let them do it?
So I entered the accounting profession over 30 years ago, Ron. The profession was slow to change then, and it's slow to change today. I mean, how can we reverse that? Is there a wake-up call that's going to shake up the profession?
Well, I think there's lots of different forces, what I call pincer movements that are going to drive change. One, of course, is just the natural talent for competition. Competition for talent. The best human capital. Let's face it, the best brains are not going to want to work in an environment where they have to track every 6 minutes of their day.
Yep.
The only place time spent should matter is in prison. Nobody became a CPA or a chartered accountant to track every 6 minutes of their day, and no CPA thinks that the value that they create can be measured by time, right? We can come up with $10 million strategies standing in the shower. So this is ludicrous, and I think that's going to be a driver of new business models, is just the trying to attract talent and keep talent. The other thing is the technology. If you've read Daniel and Richard Susskind's book, The Future of the Professions, they talk about a lot of this technology coming down the pike, like artificial intelligence, deep learning, new platforms that are actually going to shake up not just the accounting profession, but all professions, including doctors and lawyers and teachers and journalists, even clergy. It's a fascinating book, by the way, and I agree with a lot of it. The question is the timing. And so I think technology is really starting to drive a lot of this change, because with cloud and apps and 24/7, 365 access to your data on whatever device you're on, that basically means that firms can do more work in less time. Well, if you're charging by time, that means automatically your revenue and your profitability is going to take an enormous hit. So now most of the software publishers, Sage, Intuit, Xero, all of them, are behind the value pricing movement, and they're starting to give their imprimatur to it and make major investments in it, in education, helping their firms become better at it and adept at changing their business model. So I think we're starting to see an acceleration. I don't think we're near a tipping point yet, but I always say that the death of the billable hour and the timesheet may not be within reach, but it's within sight.
Yes. The point you make about basically with hourly billing, the more efficient you become, in other words, the better you become, the less you can charge.
Absolutely.
So let's all run faster on the treadmill to get nowhere faster, whatever.
Ian, if accountants had built the Concorde, they would have charged less for it because it flies faster, right? Less billable hours.
Yes, that's great. So do you see more people come to you looking for help in value pricing and how to make it work and how to address their clients with it to make that change?
Yes, we do. I do a lot of consulting with firms, to do a lot of in-house education. I mean, my real goal is to teach myself out of a job. I mean, that's why I make books available, and our website's all free, and there's lots of resources up there. My fellows are willing to talk to anybody who's serious about making this change, and we really are doing this to better the posterity of the professions. But we do get an awful lot of interest. I mean, I did a series of webinars for Intuit last year. It was a 4-part series, and it drew over 2,300 people. So there's a lot more interest in it than compared to, say, when I was starting about 20 years ago with this message.
Well, I'm glad to hear that, and I hope that trend continues. On another topic entirely, I see the tax codes made it into the political discourse. As someone who's written an entire CPA course on alternatives to the federal income tax. What's your opinion? Do you see significant changes to the tax code in our near future?
Yeah. I'd love to say yes, and I'd love to say I'm an optimist. I used to be in my youth. When I wrote that course, I thought there was real opportunity for some dramatic tax simplification, something like a flat tax or a fair tax, national sales tax, whatever you want to call it. But I just think the way our political structure is set up, Ian, that Congress is never going to want to give up its social engineering through the tax codes, never going to want to give up its power, its lobbying money that it gets from the tax code. And so I think the prospects of a simplified tax code, something that would dramatically shrink the CPA profession, is probably still a long way off. We're not enlightened enough to get there, I think, with the government that we have.
No, I'm sure that that's the case. And you hang out with and speak to many futurists and thought leaders, and of course not only in the accounting industry, but also in finance, law, technology, and marketing. What are one or two of the ideas you've heard recently that really got you excited or intrigued you, or something you never even heard of, perhaps?
Wow. I would say the Future of the Professions book by Richard and Daniel Susskind, the father-son team from the UK. Daniel's an economist at Oxford who was in the policy unit at 10 Downing Street, and we just brought him out to Sage Summit and had dinner with him, and he gave a talk. So I was able to talk to him, and I find the work in his book incredibly powerful, and that's had a big impact on me. We're starting to teach some of the principles that they're out there spreading about how this technology could change the nature and role that professionals play. I also think an idea I'm very excited about is blockchain technology. I mean, this trust protocol, this so-called trust machine, as The Economist calls it, I think has incredible implications for the accounting profession. When you start talking about a time-stamped, publicly distributed ledger, the blockchain, then you're going to have triple entry bookkeeping in the future because things will be posted on the blockchain. If things are posted on the blockchain, it's almost like they're automatically audited. They're automatically verified. So I think that's going to have dramatic implications for auditing firms and accounting firms and bookkeepers. And we're in early stages with the blockchain, but money's being poured into it in the billions. And there's a lot of startups out there, and I'm really excited by the prospects. I think the blockchain is going to be tremendous.
Could you explain a little bit more about the blockchain for people who haven't heard of it, please, Ron?
Yeah, it's a publicly distributed database, sometimes called a publicly distributed ledger. So if there's and it underlies Bitcoin. Now, it's completely separate Bitcoin from Bitcoin, but it's the engine that verifies the transaction. So if I need to send you 5 Bitcoins for something, Ian, then the blockchain will go out and say, okay, does Ron have those 5 Bitcoins? And if I do, and it verifies that I do, then, and that verification, by the way, is taking place in millions of computers around the world. It's not just one central data center that can be hacked. There's millions of so-called miners that verify that, yes, Ron has 5 Bitcoins and he can send it to Ian. And when I do that, it's time-stamped and it becomes part of the blockchain. And then maybe some point in the future, you send me back 2 coins for something that I did for you, and the entire set of transactions is kept in that blockchain. You can go back and audit anything. It's all timestamped. So you can do smart contracts. You could do all sorts of different types of transactions on the blockchain. It's absolutely fascinating. There's a great book on this called Blockchain Revolution by Donald and Alex Tapscott. And I would recommend people read that book for kind of a layman's overview, because I'm a layman when it comes to some of the technology. This technology gets really complicated really fast, but they make it very understandable. And the ramifications of this for banking, for financial industry, is overwhelming, even for currency and Federal Reserve reform and world currency reform. It's actually amazing.
I'm sure, though, for the layman, there's significant concerns about privacy, confidentiality, the fact that the government gets more into your life than they already are.
Yes, and the blockchain allows you to be your own holder of your medical records and other data about you. So it's not out there with Facebook and Google and Apple. You own it. You control it through the blockchain. It actually empowers. It's the ultimate empowerment of the individual. It makes it easier to send money. You know, we can send an anvil. I can ship an anvil to China faster than I can wire money to China. That doesn't make sense in a 21st century, digital currency world. And so a lot of these countries that don't have structured banking and private property laws and good property records, the blockchain can go a long way to bringing that to developing countries. And I think that's going to be wonderful, and it's going to allow them to develop much quicker.
So let's step into our time machine, Ron. If you could go back 20 or 25 years ago, knowing what you know now, what's the one piece of advice you'd give yourself?
If I was starting an accounting firm, I would, of course, not bill by the hour and not do timesheets like we did, so I wouldn't have to, unlearn as much. I would have niched. I tried to be all things to all people. I think most accountants do, because we go into accounting thinking, well, I like accounting because I get to see, lots of different industries and lots of different businesses. Well, that might be great for your intellectual curiosity, but it's not great for a sustainable business model. The most profitable firms in the world, bar none, it's not even close, all specialize. The most profitable firm in the world that I've ever encountered is owned by my first senior at KPMG. All he does is dentists. That's it. That's all he does. And he turns away over half of them that come to him because he only works with people that, he really wants to and really likes. And that's all he does. So he can handle anything in a dentist's life from womb to tomb. Coming out of school, buying into a practice, starting a practice, selling a practice, getting a divorce, dying, all whatever issue comes up, he can deal with it. And that makes him a very big fish in a very small pond. And I would have specialized, because the only thing my customers had in common were they were my customers.
That's actually really smart, because if you were thinking of your practice as a business instead of as a professional practice, what we do is businesses do actually make selections as to who their customers are going to be and who they're targeting, and get good at performing to that audience. Most, as you say, most CPA firms don't do that.
No, they don't. I mean, my favorite line here is, we all know Michael Porter and his strategy thinking. Strategy is defined by what you don't do. And I think a firm is defined by the customers it doesn't have. There's a quote by Steve Jobs I actually had to rewind and listen to again, because when he said it was so mind-blowing and counterintuitive. But he said this. He said, "I'm more proud of what Apple hasn't done than what it's accomplished." And I thought, what? And what he meant was, we get lots of ideas at Apple's, hundreds, millions, but we only go after the ones where we know we can be world-class and the best. And therefore, we have to say no to a lot of things. And that's hard, right? That's hard, because you've got a lot of smart people that want to try a lot of new things. And he says we have to really keep focused. And I think this is reflected in the fact that a company like HP has, last time I looked, 60,000 SKUs, or I think it's around, actually it could be 15,000. Apple has 60 SKUs. So, it's kind of like the difference between an incandescent light bulb and a laser beam. They both take the same amount of energy to run, but one can bore a hole in metal because of its intense focus.
Yeah, that's a great lesson. In fact, a few weeks ago, I interviewed a very interesting person, Alex Boyd. He's the Director of Growth at Indinero. This is a really up-and-coming company. They have a unique combination of technology and personal touch. I think they could really disrupt the accounting industry in a big way. I've seen Indinero profiled in the Wall Street Journal and the New York Times, Forbes. Yet when I speak to CPAs, I'm amazed at how few have even heard of Indinero. Why is it that so many CPAs seem to live the so-called ostrich life, heads buried in the sand.
The mushroom life, they live in the dark and are fed, you know what?
Yeah.
Yeah, it's a really interesting question. I think a lot of it is I just encounter so many accountants who don't read, and I'm constantly amazed. If you're not reading, I mean, leaders are readers, and if you're not reading, where do you learn new ideas? I mean, you're not learning them from your Facebook feed, you're not learning them off Twitter. I mean, you might get some gems, but it's usually just reinforcing something you already know about. So if you're not out there reading books or magazines at least that will give you some idea of new things coming down the pike, I'm not sure how you get information if you're not reading.
So really big picture, Ron, where do you see the accounting industry heading?
Wow, that's always difficult because I've heard the death of accounting is coming for forever. The death of firms, the death of small firms, the death of the big four. I mean, we've all heard these predictions. I'm not a futurist. I don't claim to be a futurist. I think the future, I want the future to be a surprise. Creativity and innovation always should come as a surprise to us, and always will, because if we could plan it, if we could predict it, we wouldn't need it, right? If I knew what a wheel looked like as a caveman, I could already have one. So surprise and innovation and creativity always takes us by surprise, and I don't think that can be predicted. I mean, you look at all these sci-fi movies, Ian, where the protagonist is doing all these really cool things. Every time they get in a taxi, they still get in a taxi. They're not calling up Uber, right? Uber was a complete surprise and innovation, and so I've kind of given up predicting. But I do think that the accounting profession is going to change. I think you're going to have things like IBM's Watson and other deep learning and smart technology that can actually assist accountants do a lot of things, and their customers are going to rely more and more on them. And I think it's going to shrink the number of professionals that are needed. We're not going to need as many accountants. We're probably not going to need as many lawyers and some of the other professionals, maybe even doctors. And that's got incredible ramifications, because that means what we do, the roles we play, are going to have to change.
And where would you see one or two big opportunities in the future?
Oh, I still think there's amazing opportunity with being a firm, what we call a firm of the future, or a firm of now, whatever you want to call it, with offering value pricing and no timesheets, because I think that's a competitive advantage, not only in attracting customers, but also in attracting talent. And again, I think talent is still going to be a big issue going forward. So I think that's an enormous opportunity. There's always been opportunity for accountants to move more into advisory services. And this has been something that's been talked about since the AI CPA Vision Project in the 1990s. And I don't know how successful we've been at it. I don't think very, but I still think that's an enormous opportunity. The profession needs to stop playing historians with bad memories and help their customers make history rather than just report on it. Help them look out, do more what-if analysis, do more predictive modeling, predictive analytics, so they can peer into the future. Accounting can't peer into the future, and I think there's opportunities there. So there's still opportunities out there. I don't see the thing changing dramatically in 5 or 10 years, and I still think specialization is a real key component too. I think more firms should find a niche and narrow down.
Yeah, it's interesting that the big four are now hiring more engineers, scientists, and finance majors than possibly accounting majors these days, which I think speaks to the points you make.
Yeah, I just read somewhere where the Accenture has more nurses than MBAs or something. Yeah, it is. It's really incredible, and I think accountants have a hard time going outside their own labor pool. We tend to look to hire another CPA or somebody with an accounting degree. That's not necessary if you're doing business advisory. You actually want people from more diverse backgrounds. One of the things, I've been working with bookkeepers for the last 4 or 5 years, and one of the things that I find amazing about bookkeepers contrasted with CPAs or chartered accountants is bookkeepers have a much more diverse background. of experiences. Some work for FedEx, SAP, Oracle, Microsoft, whatever, and they bring different strengths and diversity of thought to their job, and I think that actually makes them, in some respects, more valuable than the CPA. And we're kind of, CPAs kind of tend to go through the same orthodoxy, whether you started in a Big Four or top 100 or whatever. We're all kind of taught the same thing. It's one of the drawbacks of being in a profession.
Yeah. Well, Ron, I'm very sorry to say that our time's just about up. This was so much fun. I want to thank Ron Baker, author, speaker, sage, and founder of VeraSage Institute, for sharing his insights today. Thank you so much, Ron.
Thank you, Ian.
I really enjoyed our chat. Now, if people want to learn more about you or VeraSage, what's the best way for them to do that?
They can find me all over the place. I'm on Twitter at Ronald Baker. I'm on LinkedIn, and as you said, I'm one of the influencer bloggers, so I have some 90 posts up there that people can read on a wealth of topics, including value pricing and other issues confronting professional firms. And they can also find me at verasage.com, which is my think tank, and they can find lots of resources there, read about firms that have made this transition. And I do my own radio show every Friday called The Soul of Enterprise, and you can listen to all of we've done over 100 shows now, at thesoulofenterprise.com. We've had guests on. We've had Daniel Susskind on talking about the future of the professions. We've had leading economists on, and other technologists like George Gilder and others talking about blockchain and some of these other ideas we discussed, Ian. So that's another great avenue where people can learn more, thesoulofenterprise.com.
That's excellent, and sort of makes it easy reading for those guys who don't read enough then, Ron.
They can listen. It's an audio book.
Yeah. Okay, so there you have it. This is Ian Wellham saying goodbye for now. Thanks for listening. We'll see you next time on the Accounting Success Podcast.